Good afternoon, everyone. This is the daily market update video where I break down QQQ and SPY as well as current events that's going on and earnings as well. So, a couple of things I want to point out is breaking down the market is very important due to any stocks that you're holding. If QQQ is dropping 3%, regardless of what stock you're holding, it's likely going to get dragged down as well, or it could be an inverse correlation. So, it's very important to be making sure that you know what's going on in the market as well as the stock that you're currently playing. Is it relatively strength or there's relative weakness compared to the market? All right, let's get into it. So QQQ, for me, yesterday we actually bounced off of a super key support right there. You can see all this times we have rejected and bounced off from it. This cluster of volume here. So it was essentially technical wise, it was favoring the bulls due to the size of this bounce that we had, 4%. And so bulls were looking for a daily higher low, meaning this low pivot is obviously going to be higher than this low to set up a daily trend change to try to go higher high and set a daily trend change. I love it yesterday here, so it was looking not too bad. The Bulls are trying to hold it, but today changed most of that. Let's give me a see here. So we have already retraced over 0.382. So the bull flag is off the table now for the daily bull flag because you have to be within 0.382 to be considered a bull flag. And today, after the FOMC meeting, they raised 0.25, which is already priced in for the last as long as I can remember. And the only thing that I heard that was a bit that made the market a little bit red was, let me see, around, we go to 2 minutes, see more clearly, around roughly here. While Jerome was talking, someone asked the question, is there going to be any rate cuts later this year? And Jerome said, so far, based on the projections, that is heading roughly, that there is going to be no rate cuts this year unless the data changes. I mean, we heard that last time too. And when that was said last time, market didn't drop as much. So I'm going to say today's FOMC wasn't that eventful. It's more of this drop, I would say, is more of a technical drop than a FOMC drop. And the after hours drop is Qualcomm, which is a semiconductor stock, reporting earnings. And you'd be wondering, how does it's not that small, but like Qualcomm doing bad in after hours drags the whole market down. So Qualcomm is roughly down 6%. And so the thing is that they're saying their chips for their phones are demand slowing down. And that made Apple drop because Apple is a phone company. It's not just a phone company, but Apple dropped due to Qualcomm's earning call saying that their demand is down. So this dragged the whole market down because Apple is the second biggest weighting in QQQ. So it dragged QQQ down as well as SPY. And if Apple already reported earnings, then Qualcomm's lower demand on the earnings call would not have mattered at all. But the thing is, Apple's earnings tomorrow. So there are fear of Apple actually missing from people that are in Apple stock. So hence, that's why this fear is a little bit more amplified for Apple than if Apple already have reported earnings. Then it would be no big deal because you already know the numbers. And as well as there is a lot going on. So there is another regional bank that collapsed today after hours. You can see right here. PacWest dropped another 50%, 59 now, after hours, after they saying they want to sell their entire bank. So yeah, this probably be another one that's down the drain. And so when this happened, and plus the Apple news, Qualcomm news, Apple dropping, it just dragged the whole market down after hours. So you can see QQQ is down 0.24 at the moment. Semis are down 0.5, and IWM is down 1.5 because KRE, which is the regional bank ETF, is there's weightings of that, and since the regional banks are the smaller caps, so they are in the IWM Russell 2000, so that's dragging IWM down as well. You see KRE is down another 5.2%, and we are already hitting fear lows of the fear lows. You can try catching this knife, but I wouldn't, because you're just. Let me see. Let's go to the weekly chart, see if we can see any strong supports. Okay, I guess we're getting close to it. See this cluster? Let's do a volume profile here. Let's see. That's not what I want. Roughly this one. Yeah. Okay, we broke through that. We bounced off of it a couple of times. Okay. It needs to bounce around this area right here. But like technicals don't matter that much anymore when there's so much fear in the market. You can say this would have been a great strong support right here if this wasn't fueled by just banks going under, right? Let's say you buy here and we bounce, right? Get a nice bounce going. Next thing you know, next week another two banks gets liquidated, get delisted, and boom, you're back down here again. It hits a new low, right? So, but at one point, obviously, regional banks, the ones that survive, is going to bounce really hard due to the amount of that you have dropped in a regional bank ETF. You can see we're already down, 41%. That's unheard of in a ETF. That's consists of banks. You never think of banks, right? Bank stocks that you just move like within 1% a day kind of thing, and this thing has been down 44%. So of course, one day one of this is going to get a huge bounce, but we don't know that yet. Are you able to like stomach another? Let's say it drops to all-time low. You have to stomach another 27%, and then it chops around here forever. You don't know how long it's going to take for it to bounce, right? And then you make your money. If you're down for that kind of thing, kind of pain, go. Feel free to do your thing. You can average down if you want, and then this thing may just chop forever until all the rates and things are resolved. Right? We're getting like what 2 rate cuts in later this year, so that's going to take us to the end of the year, and potentially early another half of a year. So that will take us into middle of next year, and then the rates are a lagging effect, meaning the economy is just starting to feel the full effect of the rate hikes. So let's say you add here, and then we go boom, another more banks go bust, and then start to get a recovery, and then there's a lagging of a 6 month, and then it takes you into next thing you know it's 2025, and you just gained like what 10% or something, right? 18%, and for 2 years of gains of pain you had to wait down here, and without knowing that is it going to go up or not, right? So but at one point it would be a good ad, but for me I wouldn't be touching it at the moment, but it's up to you. And so let's go back to the market itself. So that's all got for you guys on the news part of what happened today, and for technical wise, and where's that NASDAQ? So technical wise, we broke down where's my QQQ? Give me a second here. I'm going to go to QQQ. Broke down through that strong resistance where we bounced off yesterday that I was talking about earlier in the video. And you can see we cut through it and bounced back to retest it. And then now we're going lower in after hours. So now we, would I be favoring the bears now or not? You can say there's still lots of room for the bulls to actually set a daily higher low, but it's starting to not look as good. We're back into this range, so now this is the level I'm going to be looking at, and obviously this megaphone is still in play after like a whole month of going sideways. You can see we're still within this top and bottom range that we have been talking about for a whole month. And as we had a fake out down here, and it went back up, broke above, went back down. That's essentially what a megaphone is. Lower lows, no follow through. Higher highs, no follow through. Lower low, no follow through. Higher high, no follow through. And we had that too in FOMC today. Exactly a megaphone, as close as it could get on the 5-minute time frame. And yeah, that's for intraday trading. But so as now, I would say I am favoring the bears unless Apple reports really good earnings tomorrow. And based on Qualcomm, it's tough for me to say, but all the big techs reported decent earnings, but they're kind of in like a different um, sector, sort of, if you know what I mean. So it's really hard for us to say what Apple is going to do, but Apple's earnings is definitely going to dictate if we do break this low here or not. Apple comes in stellar earnings, then I would say maybe we'll come back up here, retest here, and Apple reports even if it reports in line, I'm thinking it's probably priced in. Let's go to the Apple chart. So if you look at Apple, it's been up. Let me do this real quick so it's easier for you guys to see. It's been up quite a bit, and you can see based on its history, it likes to run up before earnings. So yeah, it likes to run up before earnings, and then after earnings, it just starts to roll over. And same thing as well here. You can see we went up back in here as well before earnings. Roughly, no, not this one as much, but yeah, back in after 2022s. So we have ran up 37% on one of the biggest mega cap stock, $2.7 trillion in the market. So we can potentially be priced in of something that's priced in a flat, slight beat to slight beat earnings. So if it gets a slight beat and you see the stock tanking, then that means it's already priced in that they were supposed to beat slightly, and the price is just not reflecting how much they beat. So that means they're beating too little. So that's why it would drop. And that's all I got for you guys. It was a lot today. There was just all these FOMC banks and regional banks going on, tech stocks, earnings. And this has been a crazy week of volatility, which is great for traders and definitely better than last month where it just went straight sideways every single day. So make sure to set your stop losses and trade safe. And I will see you guys tomorrow. And let's see what Apple's going to do. And I will talk to you guys soon. And feel free to subscribe if you made it this far. And see you guys later.